This podcast is proudly brought to you by TreasuryONE, South Africa's leading treasury solutions company that unlocks financial value for your business. Welcome to this week's Currency Focus. I'm Jackie Cameron for BizNews. Joining me to discuss the strong rand and how big companies that rely on income elsewhere can safeguard profits is Cilliers, currency strategist at TreasuryONE.
We start off the day with a relatively quiet day. It's a bank holiday in the UK and it's also a holiday in the United States. So a fairly quiet day, equity markets and everything on the quiet. So the rand relatively subdued. During the course of the week, we have a few figures coming out, which could cause some interesting moves. We have unemployment and non-farm payroll productivity out of the United States. So that could prove to be a market mover. If we recall, then the last figure on the non-farm payrolls was a very, very bad one and missed the targets dismally. And that caused quite a bit of chaos in the market. So everybody's looking forward to more updates on non-farm payrolls. But the rand's still performing extremely well. It's still the best performing emerging market currency. But if you look at commodity prices, then we have seen commodity prices doing relatively well over the week. Inflation fears creeping up throughout the world. And that caused people to take a bit of a flight into gold, supporting the gold price going above the 1900s where we currently are. And also platinum, palladium and all the others followed suit. Us being a commodity currency, still benefiting from that lovely high prices in commodities.
There are other countries that are also commodity producers. Why is the rand doing better than their currencies?
Well, one of the other advantages that the rand has got is the fact that our interest rates is quite a bit higher than, especially compared to the first world and compared into the emerging markets. As we've said before, we're one of the better ones in the emerging markets basket. And we've had the COVID-19 vaccination program starting. We had a family meeting last night by Mr. Ramaphosa where some new measures was imposed, but nothing that really could dampen any growth in the economy, really. It's more requests that's been put to the people of South Africa to actually stay within the lines, wear masks, etc. But the economy still looks as if it's going to come out of the pandemic quite reasonably. Our figures released for growth seems to be on the positive side. So the emerging market space, overall, we're one of the better ones and we're benefiting from that. Our bond market is also attracting some investment at this point in time.
Andre, what is the relationship between the value of the rand and the gold price? Can you tell us a bit about how that works?
Well, we remain one of the biggest exporters of gold in the world. As long as the gold price is doing well, the rand will be doing well. Historically, there's been a relation between the rand price and the gold price. If the gold price goes up, then the rand strengthens. If the gold price comes down, then the rand weakens. That relationship between the two is still there. And as long as we are one of the major exporters in gold, that will always be the case. Also remember that a fair amount of our reserves is held in gold. So once the gold price goes up, then the reserves of South Africa also goes up. And hence, there will always be a relationship between the two.
So some companies don't like a stronger rand. We saw this week that Standard Bank released results that were disappointing because of the rand strengthening. How does that work, and how do you help your clients who have this problem where they don't actually want a stronger rand?
We must remember that if you earn foreign currency, so Standard Bank has got Standard Bank London, they are in Africa. Standard Bank has got branches and subsidiaries all over the world. So they would be earning money like Investec, like many, many other companies in South Africa who's got earnings in foreign currency. Now, if you were to earn $1 and you could convert that at a weak rand of 16 rand, that simply means that you get 16 rand for every dollar that you earn. With the rand currently trading down at the 13.75 levels, that income is reduced significantly to 13.75 per million US dollars. So percentage-wise, your earnings that you had coming in from offshore profits is significantly lower and does impact on the overall profitability of the South African entity. So that's where that relationship comes from. How do we help customers? Well, in times of movement, adverse movement, there is products that you can use. There is hedges that you can take. You can buy options. You can sell options. You can take it in conjunction with the two by doing zero cost collars. You can take out FX forwards. Many products in the markets that you can do. And that's what you look at, is to take out some of those products and hedge yourself against adverse movements. So if you look at the last month and a half, then it would have been possible to take out some forward cover around 14.50. If you then added some forward points to the actual date where your money comes in, you could have ended up with a rate even higher than 14.50. And in what I've just said before that, if you then get 14.50 for every $1 that you earn in offshore markets, it's a lot better than the current 13.75. And that's what you do. You know, you look at how to hedge yourself with various products in the market, and that's where we assist our customers on a daily basis.
So when we hear a big company like Standard Bank expressing disappointment about their returns because of the rand strengthening, does this mean that the people in their treasury haven't looked for these opportunities?
Well, I'm treading on very dangerous territory here by saying that they did not, because I have no idea whether they did take forward cover or whether they did not take forward cover. But I would imagine that from a bank's perspective, it would be just a general comment as well, that in these times with the strong rand, their income is adversely and negatively affected by the strong currency. That does not say that it might even filter through to the actual bottom line of the company, because they might have taken forward cover. Very difficult for me to say what they would have done, because they definitely not a client of ours. With a big treasury like theirs and one of the leading banks in the market, they are pretty much up to their own as to what they do and what they don't do. So dangerous waters for me to say and speculate what they would have done. I can only comment as to what you can do.
So just in broad brushstrokes, then, when an investor looks at companies like this, should they be asking questions about how the company manages their currency risk?
I think that's questions that the shareholders of the company should be doing, yes. That's certainly one of the questions that as a shareholder of a company should be asked, because that could limit the risk that the company incur and to the benefit of the shareholders if they actually do that. So certainly questions that must be asked.
In broad brushstrokes, then, for the smaller company, how do they engage with these various products, thinking about, is the rand strengthening or is it going to weaken? It's really quite challenging to tell which way it's going.
Yes, it's a specialist field. And, you know, I can only recommend to smaller companies, especially that does not have treasuries of their own, that does not have their expertise within their own companies, to engage with outsourcing companies like us that does have the expertise, that can explain the products to them, that can recommend products to them, and can assist them in steering through turbulent times in foreign exchange markets and turbulent exchange rates, to manage that and to limit the risk that the company incurs and come through these troubled waters on a better footing.
You've been listening to Cilliers, currency strategist at TreasuryONE. I'm Jackie Cameron for BizNews.